Hello, this is Mike again with Netpicks.com and the Options Mastery Program. This is the weekend recap video for Saturday, October 17. So we're coming off of another week of really strong market action. We'll take a look at some key levels that I'm watching into next week. We'll take a look at a handful of trades that have been closed out, including a couple of losers, which, to be fair, I've mentioned it in earlier videos. When we have losers, we'll show you guys. We've showed you a lot of winners here the last couple of weeks, but we'll show you what happens when the trades don't work out. And then we'll talk about some things to keep an eye on for next week and news related. So if you take a look at the price action, we're going to start out with our market overview charts. These are daily charts of the major US index ETFs. We look at these quite a bit for overall market direction. We don't trade these charts. It's just our way of staying fine-tuned to the current conditions. Where have we come from? Where are we heading? This really aids us when we start to determine position size next week. I've talked about this in previous videos. I don't take every trade with 100% position size. It all depends on current conditions. Well, this is how I determine that opinion. Okay, I want to take a look at current price levels. So if we take a look at this chart, what you'll see over the next few minutes, we're at some pretty overbought levels, which means that any long trades that we might get next week, I'm going to reduce my position size. I'm going to protect some of the profits from the last few weeks, while still staying engaged in the market. I don't want to give those profits up on a quick pullback, which is probably coming at some point next week. So when we take a look at this chart of the SPY, we've been straight to the upside for the last 2 weeks. We've broken above some key resistance levels. We talked about this cluster of moving averages in here acting as resistance. We've basically broken through all of those now. Okay, we had those blue lines that we talked about in the last couple of videos. Those happen to be our 89 and 100 period exponential moving averages. Those acted as resistance initially, and we pulled back off of those levels. We pulled back, we tested the 50 period moving average, which happened to be those mustard lines there. And the last 2 days of the week, Thursday and Friday, really strong sessions. In fact, two of the strongest sessions that I remember for quite some time, because they were sessions where we barely saw a downtick. We rallied up, we closed at the highs both days, broke through some key resistance levels, just really strong price action. If you want to nitpick here, I guess I would say I wish volume was a little bit higher. Volume on Friday was a little misleading because it was options expiration, but pretty slow price action. So ideally, if this trend is going to continue to the upside, I really want to see participation pick up. But that's a topic for another video. So heading into next week, notice on Friday's session we did close right up above that red line or that solid red line. That's our 200 period exponential moving average. Usually a pretty strong area of resistance. We really didn't even pause there. Okay, that's pretty telling on how strong the market was. So the next area of resistance up above us is the 200 period simple moving average, which is up around 206. Okay, it looks like the market is trying to get its way up towards that level. A couple things to keep in mind. We are very overbought here. We've moved straight to the upside. We can expect at least a pause. Okay, I'm not calling for a collapse next week, but a healthy pullback would be very beneficial. So what areas of support would I be looking at on any type of a pullback? Well, you can pick any level in here with these moving averages. All that resistance that we talked about with that cluster moving averages, that now becomes support if we do pull back. So in a perfect world, I would love to see us pull back to those mustard lines again. Those happen to be our 50 period simple and exponential moving averages. Love to see those levels tested next week before we go higher. It would give us a reset. Okay, what we don't want to do is continue to chase a move on a never-ending basis. We don't want to continue to chase the move higher because at some point it's going to get tired. Okay, we don't want to get caught by a quick market turnaround. So those are some areas that I'll be watching next week for support. I'm talking 198.60 up into the 199.25 range, and then the resistance up above us is around 206. Those are some longer term levels to keep an eye on. If we take a look at QQQ, I'm not going to spend as much time on the Qs and the diamonds because everything that I just said over on SPY really holds true for these other markets as well. This is the Nasdaq. We've broken up above all of those key resistance levels, all of those moving averages. So now our focus shifts to either swing highs that previously held, or the 0.50s and the 0.00s. Those oftentimes act as some pretty key levels to watch. So up above us, we've got 109, 110. Those levels will be some areas of resistance to watch next week. And then below us, we've got that whole cluster of moving averages as areas of support. Those will be levels that I'll be watching next week. Now keep in mind, we are smack dab in the middle of earnings season. Over the next couple weeks, we're going to have some of the big tech names, the big market leaders release earnings. I'm thinking of Apple here, Google, Amazon. We've got a lot of those big names that are releasing. So we've got the catalyst there for some pretty big moves. That's why it's really important to watch some of these key technical levels. Over on the Dow, we are approaching that 200 period moving average there right up above us. So that should be the next area if we open up higher next week, 172.75 or so. That's an area of resistance which I would expect should hold up pretty strong. I would expect a fight there at that level, potentially from some profit taking, potentially from some people trying to take advantage of these extremes here on the overbought levels. So we'll see if that plays out. So 172.70, 172.75 for areas of resistance, and then down below us we've got all those moving averages. Would love to see a pullback into those 50 period moving averages, those mustard lines like we talked about on the SPY. So really would like to see some pullback here next week. I would like to see the volumes pick up. Volatility, let's take a look at the VIX here. The VIX has been absolutely killed here the last couple weeks. We talked about it in the last couple of videos. You can see the VIX is now down, testing the 15 level. That's extremely low compared to what we've seen over the past month or so. When that happens, when the volatility contracts like that, as an options trader, which I am, my playbook shrinks because I don't want to sell a ton of premium when volatility is this low. Okay, so we've got to keep that in mind next week. We want to be picky with our positions, because we know that odds are over time that VIX is going to want to try to bounce higher. Okay, it's going to want to try to normalize. We've seen on 10 or 11 days in a row on VXX down to the downside. So we're due for a bounce here. And that would be great to see, because as the VIX rises, if we start to get a bump up into the high teens, low 20s, that's when we can start to consider selling premium again, which ideally, that's my number one choice as far as taking trades go. So the VIX very beat up the last couple weeks. So there's really the fear is getting sucked out of this market, which is pretty amazing considering, and I try not to go off on a rant here, considering that this market continues to move higher, the VIX gets killed, and the news has not been that great. The earnings have been disappointing here so far. The economic numbers here lately have been disappointing. So we're right back into that scenario where bad news is good news, because everybody is saying, hey, if the economy is slowing down, if the earnings aren't performing, how in the world can the Fed raise rates? So rates are going to stay low. Let's continue to just pour into stocks. That's a very dangerous position to be in long term, but we can't fight it in the near term. Okay, we have to continue to take what the market gives us. So when we take a look at some of these charts in a moment, you're going to see trades where, if I don't have my system, if I don't have my charting in place telling me where to get in and where to get out, if I'm just trading off of a hunch, then I would have been 100% short a long time ago, and I would have been getting beat up to death. Probably would have blown out an account by now. So it's really important to fight that urge to trade off of a hunch. We all have our opinion on what we feel the market's going to do. Okay? Try to block that aside. I mean, you can always trade off of that as far as position size goes. Okay, if you're a little nervous about chasing the move to the upside, trade to a smaller position size. What you don't want to do is say, we're overbought here, there's no way we can continue to go higher, I'm going 100% short. Well, that's over time, that's a very dangerous strategy to use. Okay, so we're going to continue to focus on taking what the market gives us. So let's take a look at a couple of charts. I've promised here in previous videos that, as losers come, we'll cover them so you guys can get a feel, for what we typically see on a loser. And I'm going to show you a couple of trades here that were about as bad as it gets. So we've talked about a lot of winners here over the past couple of weeks. We've talked about trades in the 60 to 120% win rate as far as returns go. So we've talked about some really, really nice winners. But in fairness, if you're trying to get a feel for what the system does performance-wise long term, it's important to see win rate. It's important to see what the winners look like. But it's also important to see what happens on a trade that absolutely goes dead wrong, dead against you. So let's take a look at a couple of those. This is TLT. This is the bond ETF. And bonds trading pretty interesting here. With the market rallying to the upside, as strong as it has here the last couple weeks, we'd expect bonds to get hit a little bit. We have not seen that. The bonds have actually hung in there. So that could be a potential warning signal heading into the next couple of weeks. The bonds have not sold off. Okay, so what we did initiate a short position back here. You can see it here. We triggered into our short right around that 122.08, just below the 122 levels where we ended up getting into the trade. And we went out into the November options. We bought the November 123 put, and we paid about $310 for that position. Now you can clearly see that we barely triggered in. We made no progress in this trade at all. We didn't hit any target levels, and we turned right back around and we hit a stop. Okay, so the trade, it flat out didn't work. It happens. Okay, I'm not going to sit there and say, oh, I avoided that trade. It was a losing trade. We didn't take it. We absolutely took it. So we sold it out once we hit our stop level here. Okay, we weren't stubborn. We didn't try to hold on to the trade longer. We stopped out. Sold it out for $1.70. So even though we had $310 of risk initially when we put the trade on, we're not going to lose that entire $310 because when we hit that stop, we're going to be able to sell out of that put option and recoup some of our investment. Okay, so we took a $140 loss. This is a 45% return. The reason I wanted to show you this trade, this is towards the larger end of what we typically see on a loser. I wanted to show you what a worst case scenario would look like. Okay, this trade barely ticked us in and it stopped us out for a full loss. Okay, so 45% loser. I mean, did it hurt? Yeah, I mean, it wasn't fun. But remember, we took a larger winner here on the long trade. So net, I mean, we've had a loser and a winner on the last two trades and we're still up money. So that's the nice part. Okay, so and now we have this long trade here setting up for next week. 124.60 is our entry point. I know you see 124.55 there on the chart. I talk about 0.50s and 0.00 levels all the time. We try to adjust around those because, like I've talked about, they act as support and resistance quite often. So I bumped that entry point up, and we'll look to get long. I would actually like getting long bonds here next week. If equities roll over, in theory, that should be good for bonds. So we'll see what next week brings us. But that is one of the charts that I'll be looking at early in the week. Another loser was Tesla. I want to show you one on one of the higher price stocks as well. So we had this short trade on Tesla. It was a re-entry trade. We'd already booked a full winner on the short side here on the first trade. This re-entry, we just the move to the downside got a little tired. Okay, we were due for a bounce, and that's exactly what happened. So unfortunately, when we triggered into this short trade right here, that exact entry point was 215.68. We bought the November 220.205 put spread for about $670 per spread. Okay, so much like TLT, flipped around on us, came back, and you can clearly see that we hit a stop. Okay, so we sold out of our position once we hit that stop for $4.90. We took a $180 loser, or a 27% loss. Okay, that's pretty typical. Okay, a lot of times our losers are in the 20 to 50% range. That's a typical range for our losing trades. Okay, so you can take a look at the last two trades, much like TLT, a loser, a winner, and we're still up money. That's the nice part. That's what we're looking for long term. That's the formula for success. So you need a good win rate long term. You don't need a 90% win rate, but for us, we want to win 2/3 of the time, and we want our winners to be larger than our losers. That way, in the long run, winners, losers, break evens, we're making money. Okay, so I thought it was important to show you those two losing trades here to be fair and show you what the performance looks like long term with the system. Now, with those losers, you know, why would you start out with the losers, Mike? Well, I want to be totally transparent here. The nice part, we did have a good week overall, because let's take a look at some of these other charts. Let's take a look at the index products. We've got a couple of open trades working here. So early in the week, last week, we did book a couple of partial winners. We talked about these long trades in the weekend video last week. We did get taken out. You can see our trailing stop kicked into place here, and I'm circling it right here. We got out right around our first target. So we booked a nice partial winner. You know, it wasn't a full winner, but we protected some profit and rang the register. Later in the week, we talked about Thursday and Friday ending very, very strong in the overall market, and we did get triggered into a long. Okay, that was another long trade that did trigger in, and we did just hit that first target Friday afternoon. So that was great to see, because that does a couple of things for us. Number one, we're able to move the stop up. Okay, reduce the risk, move the stop up to break even, take the risk off the table. Okay, it's a good position to be in for next week. 2, we're already positioned really well for next week. So what if we do come in Monday morning, get one more move to the upside, but we don't have to worry about a gap. We don't have to worry about a gap to the upside and missing out on that move. We're already in a trade. We're already in a profitable trade. So we can react pretty quickly on Monday morning. We have our full target up at 205.31. So still a decent move required to hit target, but at this point the risk is off the trade. That's a good position to be in. Very similar story on QQQ. Go ahead and take a look at the Nasdaq Etf. So we did get out of our trade here, the long trade that we talked about last weekend. We got out with a partial profit, so we booked some profit there to start the week. It's always a good position, even if it's a small profit. It's always great to lock in some profit early in the week to start. It really builds that confidence for later in the week, should a couple of losers come, like we just talked about. So we did trigger into a second trade on Thursday, so we're in a long position heading into next week. We've got our targets at 108.44 and 110.17. Our stop down at 105.44. So a lot of big tech earnings coming up next week, or the next couple of weeks. So let's just see if we can get one more push to the upside and close out of these full targets. So we're positioned well into next week. Amazon is another one where we've got earnings coming up, so we're trying to squeak out one more trade here. Let's take a look. So early in the week, last week, one of those trades that we talked about in the weekend recap video last week, we did get taken out with a partial profit. So last week, it was one of those situations where we were booking profits, but unfortunately we were just missing out on full targets. So it was a lot of partial profits. It's a profit nonetheless, but we were just missing out on those big moves, unfortunately. And then we did trigger in Thursday into another long trade, which made some great progress. Just super. Amazon, probably the strongest name on the board. We're only, I believe it's only $10 away from all-time highs, so we're right back to those very strong levels, and we'll continue to see what happens next week. Full target up at 576.21. The stop is now at break even. If we get any type of an up opening next week, we'll really start to ramp this stop up and lock in some profit. We're definitely going to be out of this trade before the earnings are released. If you're a Thinkorswim user, you can always click on these little red icons next to the symbols to give you the release dates. We've got earnings out on the 22nd. Okay, so we've got earnings out next week. I've got a couple of days to start next week to see if this trade hits full target. If it does not, I'm going to exit the trade no later than the day before earnings. Okay, because I do not want to hold and see an overnight gap against us and give back all this profit. So we'll keep a close eye on this early next week on Amazon. Let's talk about energy here as well. Let's talk about XLE. So late last week, we had closed out of our partial winner here on the long trade. We got out right around the first target. So you guys are starting to see a trend develop here. And a lot of these trades, even the trades that don't work out, we're either reducing risk because the first target is hit, or we're putting in a trailing stop to lock in profit. So on a lot of these positions, okay, even though they don't look like they're hitting full targets, we're locking in profit along the way. So it's a great position to be in when you can be proactive and use smart money management. You know, it pays off in the long run. And now we're in another long trade. We almost stopped out at break even to end the week at 68.19, but we held on. We got to within a few pennies of stopping out, and now we're moving back higher. Full targets at 70.81, so that's another one that we will track into next week. Let's talk about a couple of trades that were closed out. We talked about, I'm not going to spend a ton of time on these because we've covered them in the midweek recap. Here's American Airlines. We close out of a really nice winner here to the upside last week, and now we've been flat. Okay, we're probably going to stay flat too. We've got earnings out on the 23rd. You know, I'm probably going to stay on the sidelines here. Okay, I'm not going to try to get into a trade and hope for it to hit target or stop before earnings are out. Let's go ahead and stay flat. Wait to see how the earnings are released, see what the market responds to those numbers, and then we'll pick it up at that point. So always easier to sit on hands when you're coming off of a full winner there, like we did on American Airlines. GLD, What's been interesting, we talked about the warning signal in bonds because the bonds stayed bid. Okay, we also had this trade that we talked about in the weekend recap last weekend. We were in a long trade. It did hit full target here. Okay, we did get out of this trade midweek. So we saw a really nice move to the upside in the gold ETF, booked our full winner on some long call options. But what's interesting here is with the market rallying back to the upside, you would typically think that those fear markets like gold, like TLT, those would get hit, but they really didn't. They stayed bid a good amount of that time. So there's some warning signals in there. There's some people that are getting a little nervous here as this market continues to move to the upside. So it's great that we booked the full target here on gold on the long calls, but it also is telling us, kind of painting a picture of what to expect in the market over the next couple of weeks. So nice trade there on GLD. GoPro, and again, guys, where am I coming up with these symbols? This is my watch list that I look at every single day. I'm not just pulling up random names here. I'm just working through my personal watch list and showing you what I did on some of these trades here last week. So GoPro's been really beat up to the downside. You can look at these last couple of trades. Full winner here. Full winner here. We just got taken out with a partial winner midweek last week. So really nice move, really nice profit on GoPro. How am I playing these trades? A lot of long puts. A lot of long puts in the monthly options, and there just been some really nice returns on those moves to the downside. On the last three trades, the profits there on the long puts have ranged anywhere from the 60 to 90% return level. Okay, and a lot of these moves are nice, quick moves in a couple of days, and a lot of them don't really take any heat. We're not underwater very long on those trades. So really nice trading there on GoPro, and now the system is flat. Probably getting a little oversold, probably due for a bounce there on GoPro, but we'll see what the market gives us heading into next week. Let's transfer over to the financials. The financials had earnings out midweek. Citigroup and Goldman Sachs. What I did here, because you're going to see, well, Mike, there was a losing trade here, where the long trade got taken out with a partial profit. I did not take those trades because of the earnings that were coming up. Okay, I'm going to do that with every name on my list, whether it be Apple, Citigroup, Amazon, Google. I am not going to hold through earnings because I know the big moves. I mean, we can see 10-20% overnight moves. I don't want to get blindsided by that. Even though we're in risk-defined positions in most cases, we can't lose any more than what we have on with an option position. I don't like the overnight risk. I don't like the flip of the coin. So I try to avoid earnings at all costs. So I'm going to stay flat here. Actually, I'm going to pick up these next week. Early next week, anything fresh and new, I'm going to take the next fresh setup that comes on these financial names. So I've filtered out the last couple of days because of the earnings, and now I'm ready to jump back in here early next week. So we're flat on Citigroup, just waiting for a next setup to print. Goldman Sachs, here's another one that you can see, well, the system looks like it had a loser here on the long side. It looks like it had a loser on the short side, and now it looks like the system's in a long trade. I didn't take any of those because of the earnings last week. So now heading into next week, I'll start to take the next fresh setup. Whatever prints next, I will go ahead and take there on Goldman Sachs. So I don't like to sit on the sidelines. I don't like to filter out trades. There's a few exceptions to that. Earnings, like we just talked about, and there's some holidays throughout the year. When we get into Christmas and New Year's, for example, I will filter out trades because track record shows that a lot of times it gets choppy, and I don't want to mess with choppy price action during those stretches. So those are some of the exceptions to the rule of taking all trades. Let's just wrap it up here talking about some of the global markets. Let's talk about EWZ. This is the Brazil ETF. So let's zoom in here. We've got a long setting up heading into next week. So the long is setting up with an entry point at 24.36. I talked about this in the recap video last week. This long trade, we had a gap last Thursday, and we gapped up past an entry point. So we were fortunate enough to miss out on this trade to the long side because of the gap. And we talked about that in previous videos. We're very cautious with gap situations, and we teach our students to not chase. Here's a prime example of why we don't chase. We saw a gap past our entry point. We're not going to chase that move. We're going to look to get in sync if price action does pull back to the entry point. So we are able to avoid a loser there using our gap rules. Now we have an entry point at 24.36. That will definitely be a trade that I will consider next week. If it does trigger in, I'll look at some long calls out in the November monthly options. So 24.36 is the entry there on EWZ. Over on EEM, just zoom in there. Coming off of a full winner on the long trade. We talked about that in last week's video. And now we have a new long setting up. Entry point at 36.48. So a couple things on this long trade for next week. I will push the entry point up above 36.50. Try to get above that resistance level at the 0.50 area. And this is where it's so key to look at those market overview charts and try to form an opinion on what you think the market's going to do. Okay, and we talked about this earlier. Okay, I'm not going to look at those charts and say, you know what, we're overbought. I'm not going to take any trades. I'm just going to go 100% short. Okay, we talked about that. It's dangerous to do that. I don't like the upside here because we've already seen a heck of a run the last couple of weeks and we've been profitable. I want to protect those profits. So what can I do here if we do trigger into this trade at 36.55 or 36.55, 36.60? I will take the long trade, but I'll be more conservative. I won't trade weekly options. I'll go out to the monthly options. I'm going to reduce my position size. I'll take the trade with probably 10 to 20% of my normal position size. That way I can still stay true to my system, taking all trades, but I'm going to protect some of the profit from the earlier trade, knowing that we're probably getting a little long in the tooth there on the move to the long side. Could you also take a call spread as opposed to a long call here? Yes, that's another conservative way of taking the trade. So that's why I love trading options. There's a ton of flexibility here. You're not just limited to buying or selling shares of stock or buying or selling the option. You can use different types of strategies to reflect how aggressive or conservative you want to be. You can't say that about any other market out there, and that's why I trade options almost exclusively these days. So the goal for next week, just to summarize everything that we've talked about, we've booked a lot of partial winners, a lot of nice full winners here the last couple of weeks. We're getting a little extended on the upside, so if we continue to move higher, I'm going to continue to trade smaller position sizes on my long trades. If we do get the market to roll over and head lower next week, if we do get short trades, new short trades to set up, we'll talk about this in the midweek recap video next week. If we get short trades to set up, I will jump in with a full position size. Okay, ramp it back up, knowing that we're overbought, and we could probably see a pretty decent size pullback in the coming days. So if you're looking at those daily charts, which we talked about at the start, look for pullbacks into the 50-period moving averages. I think those would be some good pullbacks, good areas to potentially book some profits on some short trades and look for the market to bounce off of those levels. So let's keep a close eye on things over the next week or so. Make sure you're double and triple checking when earnings are on the names that you're trading. We'll keep a close eye on economic numbers here next week, and hopefully, fingers crossed, that we get back to a two-way market where we get some volatility to kick back up, and it would give us more things to do heading into the next couple of weeks. So, as always, I'm going to wrap this video up here. You have my email, mike@netpicks.com. Feel free to send me an email if you have any questions on any of the charts that I talked about. If you'd like more information about the system that we do use, feel free to reach out to me. So hopefully you found that beneficial, taking a look at some losing trades here in this video. It's the full range of results that we see with our trading. So enjoy the rest of your weekend. Go watch some football, and we'll pick it up here early next week.